For someone unfamiliar with Wagers Capital, how would you describe your investment philosophy?
It's pretty simple, leaving something better than I found it.
So, when you're evaluating a deal, what are the three things that you look at before digging deeper?
Yeah, so first thing someone sends me a deal, if it's an existing deal, I want to know how the property has been performing the past 12 months. So I'm asking for what's called a T12, the trailing 12 months of performance on the property, and sometimes even more, 24 months. First thing is looking at how the property is performing the last 12 months. Second thing is getting a rent roll. What is it today? So now I'm looking at, as it sits today, has there been any movement in the past 12 months? And then I'm looking at, the next thing is,
Today, I am joined by Brian Wagers. Brian is the founder of Wagers Capital, a real estate investment and development here based in Northwest Arkansas. He's also the co-host of Northwest Arkansas Investing Podcast and a managing partner at Contracts, Closers, and Connections, a regional network that brings together investors, operators, and professionals across the real estate industry. Now, you're from Cincinnati.
that's right, yep, Cincinnati, Ohio.
So how did
513.
you end up here?
Yeah, so I was born and raised in Cincinnati, went to the University of Kentucky, so to get my business degree there. Fresh out of college, wanted to be a personal financial advisor. No one would really hire me, so I went into sales, logistics sales to be specific, and worked for a company for a couple years there. Did really well there. I went from making $35,000 a year to making six figures a year, and worked my way up. Grew my book of business there, my sales book of business, making 100 cold calls a day. And they asked me if I wanted to move to Arkansas about 2 years in. I was 22 and single at the time, and at first, I was like, no, not really. I don't want to move to Arkansas. And I had, I liked living in Lexington, Kentucky at the time. And they said it was a 1 year commitment. And, for me, it was worst case scenario. I'll move to Arkansas, hate it, but it'll look good on my resume. And, similar to what you were talking about before the show, you went to Toledo, Ohio for the, to grow with your husband there. But yeah, I moved to Arkansas with the company. Fell in love with the area. Lived in Fayetteville my first year. I've been in NWA for about 11 years now. So that's how I ended up in NWA.
Did your family follow you at all?
About 10 years later, my mom did. So I moved her out here about a year and a half ago, 2 years ago, after we had our first boy. So have her closer to family. My dad still lives in Ohio, and my grandma still lives in Ohio.
Gotcha. It's OH.
OH.
Do you know?
Ohio.
Yeah.
A lot of my friends went to Ohio State, so I
Yeah.
had some good times at OSU. I'm a Kentucky grad, so I'm a UK fan. And I have some friends that went to UC as well.
Yeah. Okay. We enjoyed our time there, but as you said, it's not a thriving area like Cincinnati and
Yeah.
some other areas in Ohio. But my kids enjoyed it. We liked the snow and everything too. So
Yeah, you get the seasons. I mean, you get all the seasons here in Arkansas, but Cincinnati's great. I go back once a year to visit family and take the little guys, and they get to meet their great grandma. So it's
it's
good.
exciting. Your mom's here too now. I hope she likes Arkansas.
Yeah, she does. She likes it a lot.
Good. Okay. So, as you said, you started your career in supply chain and logistics. What lessons from that world translated into real estate investing?
So speed of communication was huge in logistics. I mean, you're moving. At the peak, it was moving 100 truckloads a week, and that's 100 different shipments, 100 different drivers, 100 different customers that you're tracking. So I never wanted anybody to be waiting on me in logistics and communication. So I mean, I'm responding to hundreds and hundreds of emails a day. So I became very good at email etiquette and response time. So that translated really well into real estate. Real estate is kind of a slow moving vessel. Historically, I think maybe it's sped up a little bit the past 10 years, but it's a slow moving piece. So I think that was kind of a breath of fresh air to brokers that I was working with at the time. Like, I was very responsive, why a deal worked for me or why it didn't work for me. I would give them feedback right away. I never wanted anybody to be waiting on me, whether it was a lender or a broker or a buyer, investor, insurance person. So I was able to handle and am able to handle email communications very fast. So that was a huge skill, and I think conflict resolution too was big. Trucks break down, trucks catch on fire, shipments get delayed, you get manufacturing hit that's held up, and a lot of it is out of your control. So some people are afraid to handle that conflict right away. They overthink it, they kind of retract, and it become that issue becomes bigger the longer you wait. So I think for me, like having the mindset of like ripping the band-aid off and just delivering bad news right away, but also, hey, here's what happened, but here's our solutions that we've already started working on, and logistics was, hey, we have a replacement truck on the way. Here's what the mechanic is saying. Here's what we've talked to the manufacturing plant. It's not the news what you want to hear, but this is what we're doing. And you want to have precautions there, the right insurance set up. So same thing in real estate, hey, the lender's terms changed a little bit, or the buyer has done this, or something has happened in due diligence that we weren't accounting for. So here's how we're going to fix it or remedy it.
I love your delivery on all of that too. I'm sure that your clients appreciate it as well. And as far as your emails are concerned, they're top notch. I love receiving, and I'm glad I'm on the email list for that as well. Just the information that you give on periodically when I receive it. Plus, you landed in a really good area from Kentucky, in Northwest Arkansas. So you kind of hit that, I'm sure, running over there whenever you started doing investing too. It's grown tremendously in the last 10 years.
Yeah, for sure. And when I got to NWA, they said you should have seen the last 10 years. And, here it has grown a lot in the next last 10 years. And I think people are going to continue to say that, look back the next 10 years. And not only NWA, but also here in Fort Smith too. Fort Smith, not as rocket fueled as NWA, but they do have their own things going on for them. And I'm bullish about the area too. And Lexington was great. I saw myself living there long term, and Cincinnati is great too. If I wasn't hyper focused on NWA and Fort Smith, I think those are both great. Cincinnati, Ohio, and Lexington both have performed pretty well over the last 10 years, but they were already established. So what you talked about, what you're saying, like as far as landing and timing, there is so much momentum right now in NWA and Fort Smith compared to these other larger markets that um, being boots on the ground really is helpful in catching that momentum.
I've learned a lot too in leadership, Fort Smith, just about economic development and everything here in the area and in Arkansas in general. So it's been really interesting as well. So, was there a specific moment when you realized real estate could be more than just an investment and actually turn it into your career?
Yeah, I think, when I first got started, I mentioned I was making very good money. I was maxing out my Roth IRA account, and I wanted to do something with my money besides stash it in 401k. So at first it was invest in like it was either stock market or real estate. And at first I chose the easy path, what I thought was the easy path of stock investing. I see people glamorizing day trading, and I started and I invested some money in GoPro, and I watched it go from $35 to $5. But I was sitting there watching it like I had some sort of control, and it was actually taking up a lot of my time, even though it was mental energy. So I pivoted to real estate. I was like, okay, I'm going to go all in on real estate. And that was Bigger Pockets at the time, read every Bigger Pockets book, listen to all their episodes. And I bought a single family home in Springdale. It was $90,000 and rented it out for 600 bucks, or the mortgage was around 600. I rented it out for around 950. And it was okay, great. I got my first real estate deal, but this is going to be way too slow. Like, what I'm going to have one house a year, and in 10 years look up, not even really be that comfortable. Like, the economies of scale weren't really there in single family. So everybody I had listened to in commercial real estate, the one thing they had said was, I wish I would have got started in commercial real estate earlier. Like they said, they didn't necessarily have to graduate from single family investing to CRE like that. They could have got started in it sooner. So I think that really ignited it. So, I started investing in multifamily. I liked the fundamentals of rental property investing and the scalability of commercial real estate. So started buying multifamily in Springdale, and I was really clicking. I bought a 12 unit, and then a 20 unit, and then a 22 unit, and then a 52 unit, then an 8 unit, then another 14 unit, and then another 82 unit. So I was having some good momentum. Same thing with the communication. I was doing what I was saying I was going to do. Buying, being getting better and better at underwriting with each deal. At first I didn't really have any investors.
That was going to be my next question is how did you scale that quickly without it not being from the area? How did you make those connections with people
Yeah,
in
so
order to invest with you?
so a lot of it was invest, so my income from the logistics business was able to help me invest back into myself. So I was going to seminars, I was self-teaching myself, I was going to the real estate school of hard knocks and, doing that first 12 units, simultaneously going to seminars in Washington, DC and Atlanta, specifically on apartment investing. Read every single book I could on multifamily and commercial real estate. And so I was self-teaching myself this, and I was using a lot of creative financing in the beginning because after that first 12 unit, I didn't have any of my own cash available, and I wasn't comfortable yet asking investors for money because I wanted to prove the model, like I could do it myself, which I'm now doing with development as well. So I was doing some seller financing deals. I would have the seller carry 20 to 30% of the note, and then I would have a bank cover the rest of the note plus construction. So I was pretty leveraged at the time, but I knew I would outwork any leverage. Like Dave Ramsey would not like that approach, but I knew I could outwork any issues that would happen. And my global debt to income ratio was really good. Yes, I might have been leveraged on the properties, but I was single and young at the time. My expenses were very low. Like my overhead was low. I could live in a box and use my income to offset that. So using some seller financing, and then, friends and family saw what I was doing, saw the success I was having, and they started having interest. My girlfriend's dad, who's now my father-in-law, he started investing with me. And in the beginning, he would give me notes. So like $100,000, I would agree to give him 10% and at a 10% rate and give him back, 100, and ended up being like 120,000 back in 2 years. I did that. I gave him back it in like 12 months on one of my deals. And then he was like, I want some equity. That's great. Like, I see what you're doing now. He wanted equity. So he started investing with me. We went down to, I kind of ran out of doors in Northwest Arkansas, Springdale. So that's what led me to Fort Smith. And I started investing in Springdale, Arkansas at the time. People were, oh, you're investing in Springdale? I hadn't really, like, Springdale has changed, NWA has changed a lot the last 10 years. Springdale has incredibly, especially downtown. Um, but I had the same kind of doubt when I was going into Fort Smith, not for myself, but from others. So we came down to Fort Smith, bought a 59 unit here, a 44 unit here, another uh, 14 unit and another 50 unit. And then we bought some land that we're in the process of redeveloping, 144 units. And then I started bringing on other investors too. And that was a good road, and executed on a lot here. And then continuing that trajectory, I worked for a syndication company for a couple of years. So I, again, ran out of doors in Fort Smith too that I thought made sense. And I thought the next level to scale was buying larger apartments and syndicating them. What I had been doing in the past was joint venturing. It would be me and a couple investors, where I was a managing partner. I would set up the legal, I would find the deal, underwrite the deal, manage the property managers, manage the construction management, and oversee the exit, oversee the business plans, sort of the quarterback for the deal. And then with the syndication, I was more in charge of where our equity was coming from. So in the syndication, similar to Shark Tank, you have an offering where you're giving up 70 to 80% of the deal to investors. And for there, it's in the syndication model, it's a lot of investors. We were bringing on 50 to 60 investors per deal. And then on the managing partnership team, there was probably like 6 or 7 managing partners. We were buying uh, apartment complexes in Houston, Jacksonville, Florida, South Dakota, um, Dallas, markets across the country. And they had a couple thousand units at the time. And I wanted to get the experience of, okay, I have the experience of these, sub one, 8 to 100 units here. It's a whole different ball game when you're buying 300 units plus. You're buying $50 million apartment complexes. You have institutional capital involved. You have different institutional partners involved. So they had a construction company as well. So I tapped into that, and my focus there was more on the equity. Where's the equity coming from? And it was a really good experience, working in different markets, seeing how different markets are growing and how different market assumptions. I knew from my experience in Northwest Arkansas and Fort Smith, there's different market assumptions for both markets. In Fort Smith, historically, owners are paying a lot more of the utilities. NWA, they are. You can't account for as much rent growth in Fort Smith as you can Northwest Arkansas. Different intricacies, but totally different when you're going to South Dakota, Dallas, Houston. And then, about a year and a half ago, started get drawn back to NWA and Fort Smith. I was starting to get more opportunities here in NWA and Fort Smith, and more that I could control. I felt with a syndication model, a little less out of in my control. I like being the quarterback of the deal for sure. And, you're able to be more nimble that way. And I like working with less partners. Partnering up is great. Everyone wants to partner up and everything like that. But, it's not always a good thing. You have to be careful who you're partnering with, and having too many cooks in the kitchen. Sometimes nothing gets done because everyone wants to say. So, year and a half ago, came back to Northwest Arkansas and Fort Smith, and started doing more development.
Is
And
that when you founded your own Wagers Capital?
so Wages Capital, I mean, it's been around. I mean, since I got started 8 years ago,
Okay, I thought you worked for another company. That's why I asked. Whenever you
when
were in Houston, Florida, and
yes, that was
okay,
a different company. Yeah,
okay,
so I had Wagers Capital, worked for the syndicate. I was doing that for about 4 years, and then worked for a syndication company for 2 years, and then left them about a year ago and started
got
doing
it.
Wagers
Okay,
Capital. But in the
hmm
beginning, it was Springdale Rental Properties at gmail.com. I didn't have a business card. I didn't have a website. I was just out there doing deals. I didn't have any sort of, it was just an Y Street Apartments LLC, or, Kincaid Village Apartments LLC. Each one was its own entity, and I would hold personal through that. So it was technically Wagers Capital, but it was the same structure as I'm doing now. And, when I first got started, it was my girlfriend driving around, who's now my wife, driving around crappy looking apartments and taking pictures of them. And we'd write letters in the mail and tell them, hey, we're interested in buying your apartment. She helped actually build out a website, started getting me on podcasts, getting my name out, to kind of attract uh, more investors to the sphere. So in the beginning, yeah, it was Wagers Capital, but it wasn't like officially
I
a
understand.
company. Yeah.
Okay,
hmm
gotcha. So looking back now, what mistakes do you see new investors making that you were able to learn early? You have a lot of
Um,
experience, so
yeah.
I'm excited to hear this.
Yeah, I think there's a ton. I mean, I could start on the partnership too. Like, make sure you're partnering with the right people. Make sure they complement each other. I think I see newbies partnering with other newbies, and it's like because they both don't have experience, or the group doesn't have experience, but really you're not complementing each other. And um, people rush into partnerships too, just to like figure like 1 + 1 = 3, which it can, but I would be careful about when you're going into partners, what you're bringing to the table, and figure out what they're bringing to the table. Does it complement each other? Figure out the full capital stack. In real estate, it's who's bringing the equity, who's managing the deal, who's finding the deal. Those are the three big levers, I think. The capital, the finding the deal, and then management of the deal. So that's where you should start. I think investors too, underwriting is a big one too. I see a lot of underwriting mistakes, getting crazy on rent assumptions. The broker told me not to throw brokers on the bus, but it's called a rosy broker.
Thanks, Brian.
It's a rosy broker pro forma, where they're saying, oh, the rents are today are 500, but we can get them to 1,000. What are you making those assumptions on? And I see a lot of people say, okay, maybe that's true. Maybe this apartment is just, or this commercial real estate property is just in bad condition. You can come in and make a lot of fixes, but that doesn't happen on day one either. That's going to be a 12-month, 6-month, 18-month process, depending on how fast or good you are. So, um, I would make sure that you are gradually increase, like your underwriting should support a gradual rent increase, not a day one increase. So it's great that they're under market value. Those are the best opportunities when there's a motivated seller. It's under market in some form or fashion, but make sure you're gradually doing that. And then talking, like those assumptions too, talking to property managers, talking to your lender, your debt assumptions are big, making sure you structure the debt correctly. I saw that with a syndication company, how it was correctly structured and not structured, making sure like the lender is a huge partner in the deal too. So making sure you trust the lender, making sure that they're not adding too many fees, and talking to lenders about the deal too. Like, it's kind of an art, not a science. And, you don't want to just send lenders and property managers every deal on LoopNet. You want to get an understanding of basic underwriting, if it's passing the sniff test, if it's actually a deal. But it is good to start balancing those. If you think you're kind of close on a deal, it is good to start talking to actual vendor partners. Hey, property manager, what do you think you would manage this? Um, I see a lot of assumptions from buying from mom and pop owners who are self managing it, and they're not accounting for payroll or property management costs on that. Just because the property manager or the owner is managing it this way the past 12 months, that doesn't necessarily mean it's going to be managed the same way the next 12 months. So verifying that, talking to insurance agents are another one too. It's been a huge increase. People are property taxes and
Depending where you are, too.
yeah, property taxes. I mean, Arkansas, what I saw dealing with the other larger metros, insurance definitely got hit harder than here. We're definitely feeling insurance and tax increases in Arkansas, but same thing with cost of living. But you look at a Dallas, look at a Atlanta, the Houston, those markets are really hitting it. So being careful with your tax and insurance assumptions, talking to a couple insurance agents and getting actual quotes will be helpful too to your underwriting, because those can blow up a deal too.
Oh, yeah. For someone unfamiliar with Wagers Capital, how would you describe your investment philosophy?
I think it's pretty simple. Leaving something better than I found it is what it's drummed down to. Like, how can I make this property or now piece of land better than what it is today? What can I do differently that the past owner hasn't done, or what's the upside? And what do I have to do to make it happen? For existing properties that's coming in and improving the exteriors, improving the interiors. Just closed on a motel here in Fort Smith that we're going to convert from a motel to an apartment. The owner had owned it for 33 years. And we're going to come in and fix it up. He had just been doing daily rates and weekly rates, but it's in a good solid location. And we have good construction teams here that we can get pretty lean on fixing it up, but we have good underwriting on it for our assumptions. So existing, I always told my investors, if I can double your money in 5 years or less, that's a deal that I want to do. That's net. That's after my equity portion. That's after paying off debt. I'm trying to average investors and you're like high teens to low 20% average annual return. Historically I've done over 30%. Market's been really good, so I don't want to ever promise that. And then for development deals, it's how can we control the basis? How can we what is the land valued at? Where is the location? Will that location support what we're trying to build? I have a multifamily background, so I love multifamily more than the next person, but it doesn't always make sense just to slap an apartment building up. So figuring out what the best use is for it. And a lot of times with a development deal, if the land can be thrown into the deal, I'm seeing that make it a pencil a lot better, versus having to pay $1 million to $3 million of this land out the gate.
Yeah.
Um, for me, I usually structure deals low to no fees, and a lot of my structure is based on like my managing partner equity is like sweat equity in the deal. So, I saw with the syndication company, and I've seen with others where there's a lot of fees that aren't going into the deals, so and sometimes the lenders have fees, and you have a high legal fees with those structures. So yeah, you might be buying this apartment at $100,000 a door, but you also have $10,000 a door in fees that aren't even going into the property. So I think, as much as the investor capital that can go into the deal and make it better, is always something I'm looking for to make happen on the deal. So for me in Fort Smith, I think it's hard to do development in Fort Smith. It's the costs are high. In Northwest Arkansas, it's kind of flipped. It's hard to do existing deals in Northwest Arkansas. Everyone wants to buy apartment complexes. And everyone wants someone says, I want to buy 5 to 100 units, value add multifamily. Brokers have 100 buyers at that. And so the sellers know that too. So it's harder to do existing deals in Northwest Arkansas. So I found some opportunity in developing.
Are you developing in Springdale? Is that correct?
Yeah, working on a
Okay.
couple
I thought you
developments in
were.
Springdale.
Hmm.
Yep, a 36 unit, that should be breaking ground here in the next 30 days, and then a 200 unit that, hopefully will be breaking ground within the next 6 months that I'm working on.
That's exciting. Also, your social media is really good in order for you to communicate what you're doing in the areas that you're doing it. So if no one's following it, they should.
Yeah, try to be educational on that, like, let
Hmm.
people know how I'm structuring deals, how I see deals, and hopefully it hits with, people who are doing their own deals or people that wanna ride along on a investment too.
I know you've talked about this, but let's talk about the three things. Okay. So when you're evaluating a deal, what are the three things that you look at before digging deeper?
Yeah, so first thing someone sends me a deal, if it's an existing deal, I wanna know how the property has been performing the past 12 months. So I'm asking for what's called a T12, the trailing 12 months of performance on the property, and sometimes even more, 24 months, to really see, especially in Fort Smith, there's a lot of sewer and plumbing issues too. So that might not have popped up on the first 12 months, but if you dig a little bit more, you want to make sure that's a thing. But you can always, that's one of the first things I do in due diligence is scope the plumbing lines, especially
Hmm.
here in Fort Smith. So first thing is looking at how the property is performing in the last 12 months. And second thing is getting a rent roll. What is it today?
Hmm.
Now I'm looking at how has it changed. As it sits today, has there been any movement in the past 12 months? And then I'm looking at the next thing is how can I perform the next 12 to 36 to 60 months on the property, depending on the business plan. And how can I perform better than they are? What can I do to improve rents? What can I do to stabilize expenses? What can I do on debt? How can I leverage my lender relationships, and get good, attractive financing that'll help support the equity in the deal? So those are the three.
Perfect. Thank you. So you've been involved with both ownership and development. Which side of the business excites you the most right now?
Oh man,
I guess you have to kind of do it by area
yeah, I
too,
think so.
because
Yeah,
yeah.
yeah. I mean, so I'm redeveloping 144 units in Fort Smith, called, Lofts on Park. It was formerly Kincaid Village. Is a property that had been vacant for 10 years, kind of an eyesore in the city. No one wanted to touch it with a 10-foot pole. It actually ended up going back to the bank. And my father-in-law and I partnered on that one. We had done a lot of deals together. I was going to look at it with a syndication company, but, me and my father-in-law just ended up doing that, together. And so, I think redevelopment, now I'm under contract or just closed on the 33 unit motel that we're also redeveloping. So I think value add and redevelopment in Fort Smith excites me, but development in Northwest Arkansas excites me a lot. It's really, it's like the ultimate form of value add is how can we take this piece of dirt and take it vertical into its highest and best use. So, development is a little bit more risky than existing. You have construction costs you have to account for. You have 3 years of negative cash flow you have to account for. You have to account for getting a loan and negative interest payments. You have to have interest reserve. You have to have contingencies, but the returns are higher too for development because you are adding the most value, and that is taking it from dirt to vertical. So I think there's a ton of good opportunities in Fayetteville, Springdale, Rogers. There's been a lot of multifamily that's been built in Rogers and Bentonville. So I'm caught. Again, I love multifamily, but I'm cautious about it because there has been so much that has been built.
There's a lot right now.
The
I've been
vacants,
up there a lot
yeah,
lately.
you see
Mhm.
cranes in the sky. You see a lot of
Mhm.
apartments being built. So vacancy has definitely increased in, especially Benton County, from 3% to 10%, which most markets, if you look at those big markets I mentioned, they have 10% vacancy, and you should be accounting for that. But so I was looking at a development in Fayetteville. So we have I'm working with a landowner there, and it's a couple acre property, and we were going to do a mix of townhomes, apartments, and retail. But after really doing a deep dive on the market, there is an 800 student bed, like across the highway. There was a new single family residential neighborhood that was being built, and another apartment that was being built right next to it. So a lot of doors that are going up. So for us, it would made sense to pivot to retail. All these doors going up around it. Mm, need something to support it. So now we're building a 30,000 square foot retail building in Fayetteville, where one of the investors has a hair salon. He'll be placing another hair salon location in it. We have some other potential residents there. So that one's an exciting deal. And I think just uh, apartments and townhomes have the lowest cap rate. So on paper, it makes the most sense, because theoretically you can sell it for the most, but you have to account for what's going on in the market. And back to the partnership side of it, like having someone that actually knows your market and the intricacies of the market. I've been invested in Fort Smith for 6 years now of my real estate career, but I don't know the market as what you're talking about what's going on here in Fort Chaffee and some other areas. And I think it's important to be talking to your broker or your partners about it can change street to street. Just having a blanket statement for Fort Smith or even Northwest Arkansas can be dangerous because it is street to street
I
knowledge.
hate when people ask me, "Oh, so how's the market?"
Yeah.
Give me a zip code.
Yeah.
Give me an
Give
area
you a
because
street
I'm
address.
not, yeah, talking about the city as itself. So let's get into your podcast. What inspired you to start or partner with on
Yeah.
your Northwest Arkansas Investing podcast?
Yeah, so the NWA Investing Podcast, Brandon Still and Zach Stanley started it. They had me as a guest, and it was just fun talking to them about real estate. And I had been after it got launched, I had some ideas of people that I knew in the area that would be really cool people to talk to and just talk real estate with. And so I talked to them about, hey, what do you guys think about me being a co-host and bringing on some cool guests just so we can talk about real estate? And it evolved a lot, and we've had some really cool guests on. Mayor, talking about political sphere. We've had Mayor Fayetteville, Mayor of Springdale, Mayor of Bentonville. We've had Paul Gatlin, Mervyn Jebaraj, Tom Allen, some really cool players in Northwest Arkansas. And now it's started to evolve this year. Instead of being in a studio, we're going out and interviewing business owners on site at their business or development sites for different projects. Tom is doing a $300 million Class A office building in Rogers, and we went to interview him at the on site at the development, talking about office in Northwest Arkansas, something that I don't have a lot of experience, but that is exploding in NWA is office. Despite COVID and despite the work from home movement, NWA is still super strong in office, and it was great to talk to him about that. So getting different insights from different people in the market and just talking about real estate, it's been fun.
There's been an influx of people that have moved there recently because of a lot of the things that did change with COVID, where they a company is no longer having remote workers. So y'all had a lot move into that area. So I'm sure that that'll be really busy and
Yeah,
a
and
good
the home
area.
and the new Walmart home office is huge. Obviously Walmart's the biggest corporation in the world, so their multi-billion-dollar home campus is not just attracting national talent; it's attracting world talent. So the movement that's going to continue there, it's super cool. If you haven't driven through it, it's like the campus is awesome. It's like it definitely rivals the Apple, the Google campus, and they've done a really good job with that. And that's in turn going to attract more talent. And the Walton's philosophy too is really uh, cool because they believe in the rising tide lifts all boats because they also are a developer. They have Blue Crane Development Arm, which has provided a ton of growth to downtown Springdale because they started investing in Springdale too. But they're not as worried about ROI as me and you are as investors. Our investors are looking for high teen IRRs or 20% plus IRRs. They're not focused on IRRs or they're focused on what can help the community, what can inspire more development, what can we attract more talented people into the area. So that's added tremendous growth in Northwest Arkansas. Besides their 10 years ago when they said, hey, if you're going to sell to Walmart, you have to have a home office here. So you have companies like Procter and Gamble is headquartered in Cincinnati, where I'm from, but they have thousands and thousands of employees that live in Northwest Arkansas. And a lot of times they go on their 3-year stints, similar to how I had a stint, but then they fall in love with the area and they're like, hey, I'm staying here. Like, I
Hmm.
don't want to go back to Cincinnati or go back to these other areas. So that in turn spurs. And then you have this whole vendor community too of people that are servicing customers that are in Walmart, that handling their supply chain, handling their marketing. So it creates this whole community. And then you talk about the other families. You have the Tyson family that's super involved in Springdale, and then the University of Arkansas in Fayetteville. And then you have a lot of undercover millionaires in Northwest Arkansas that have these businesses that support the community, and they're also involved in real estate too. So it's a really thriving economy that just keeps lifting each other up. So that's
Hmm.
been exciting to be a part of and continuing to be exciting.
Well, I'm excited to see y'all now at new developments and stuff doing your podcast. I really love listening to y'all.
Yeah,
It's
appreciate it.
very insightful. I'm excited about the new School of Medicine, the Walton School of Medicine, too.
Yeah.
Hmm.
Yeah, shout out Alice Walton. She is doing a lot of cool stuff with the Whole Heart Institute right by Crystal Bridges, amazingly designed uh, institute, and then their School of Medicine that is going to be world renowned too. So I think logistics, university, and Walmart and chicken are big industries, but the medical industry is going to be like that big four. I think growing in Highlands Oncology is continuing their footprint. So it's a whole nother
Won't Cleveland
sector.
Clinic eventually be tied in as well?
I think
Didn't I
so.
read that?
I think so. Yeah.
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 Hmm. That's
So
exciting. Yeah. Well, I think I've held you on long enough. So let's do rapid fire real
yeah,
quick.
let's do it.
Okay. Best investment advice you ever received?
Invest in commercial real estate. Like, it was probably like, don't wait to invest in commercial real estate.
Got it. One book every investor should read.
The book on rental property investing was my first book by Brandon Turner, that really helped me understand the fundamentals of renting properties out, the basics of property management, construction management. It's very geared towards single family, but there's a lot of things that apply. And then Rich Dad Poor Dad is a great one that talks about real estate investing as well.
Okay, perfect. Biggest opportunity in Arkansas as far as real estate is concerned.
Yeah, it goes back to the market. I
Hmm.
think there's no blank. It's hard to say a blanket statement. I would say existing Fort Smith value add. There's still a ton of opportunity in value add apartment investing in Fort Smith. I love that space, and then Northwest Arkansas. I think there's some really cool development opportunities to tap into the 38 people a day that are moving to Northwest Arkansas and getting creative there.
38 people a day.
That's right.
Where did you come up with? Where is that
So the
information coming from?
nwacouncil.org is a really good
Okay.
resource that some of the Waltons it's a group of investors that put out stats on Northwest Arkansas. So same people that project NWA to grow to the size of Austin and by 2045. And then they put on different information about demographic studies, what's going on
Okay.
in Northwest Arkansas. So I'd say NWA Council and the Skyline report that the RVEST puts out, that's
Yeah.
really good information too.
Okay. Thank you. One mistake new investors should avoid.
Partnering up with the wrong people.
Got it. Your favorite part of living in Northwest Arkansas?
Man, it's a tight knit community. It's a very friendly community. There's a lot of people that do well there, but it feels like there's no everyone's there to see other people win. So I think it's a good like the reputation that is good in Northwest Arkansas. I like dealing with the people in Northwest Arkansas. The cost of living is great too. We looked at moving in Florida for a couple of years, and it was like, we'll just vacation here and live in Northwest Arkansas. So I'll retire and die in Northwest Arkansas.
I'm glad your mom's here with you now too.
Yeah,
I was in Bella Vista
yeah.
the other day. Have you seen the new bike lift that
I've
they're
seen
doing?
pictures and videos of it. Bella Vista's gotten crazy growth too. Like
Yeah.
the homes that are being built in
Mhm.
Bella Vista are super modern. It used to be kind of a retirement community. I haven't done anything personally in Bella Vista, but when I first came here 10 years ago, people were buying land in Bella Vista at some of the meetups, and that's something I wish I would have done. Land bank in Bella Vista, but those people are doing well. So Bella Vista is very cool.
Yeah.
That project is going to be awesome for that.
Isn't it the first one?
Yep,
That's what I
first,
thought.
yeah.
So if someone's listening today and wants to start building wealth through real estate, what is the very first step they should take? Can I answer it for you?
Go ahead.
Contact you.
Contact me. Yeah, for sure. Get educated. I think
Mhm.
figure out what you want. Like figure out, are you looking to be an active investor, a passive investor, a mix of both? I think there's so many different ways to make money in real estate. People get overwhelmed. So I think probably besides contacting me is figure out what avenue you want to go down. Are you trying to replace your job? Or are you trying to replace your income? Like, are you trying to supplement your income? So I would get more specific on what you want and try to get a basic understanding of it, and then talk to people that you might want to partner with.
Perfect. Thank you so much. I feel like I skipped a lot of questions that I had for you just because I need a part two.
Yeah, we went
So
deep.
sorry.
I went deep on some things, and
I'm
may
glad you
went off.
did.
So
No.
yeah, it's been great.
It's been really good. Thank you so much.
All right, thank you.